Hey there, my name is Eric Bennis. I'm one of the financial advisors here on the team at John Graham & Associates. Today we're going to be talking about what to do when you see a market downturn, how to weather that market downturn. So market downturns actually happen from time to time, and that's something that we expect. If you're a long-term investor, then you're going to be in the market for years and years, and you're going to experience one of these market downturns from time to time. Now, if you have a good plan that accounts for these things, and we come prepared, we have certain expectations, and we can walk through these. So the first thing to consider is some of the terminology that you may hear if you meet with an advisor or are watching the news. Terms like dip, that just means that the market has gone down between 5 and 10%. If you hear somebody talking about a correction, that means that the market has gone down a bit further, between 10 and 20%. Now, when it breaches the 20% mark, that is considered a crash. Dips happen all the time. Corrections can occur, and crashes do happen here and there. The difference is recoveries often are a bit quicker when it's just a dip, whereas a crash can take a bit longer to come back to where it was before the market began to go down. Now, once the market has fully come back from the dip or the correction or the crash and reached where it was previously, we consider the market to have recovered. And so a lot of people would say, should we try to time that? Well, timing when the market's going to recover is actually very difficult, because if, let's say, a stock or a fund has gone down 14%, you don't know, is it going to go down a little bit further, or is that the lowest it will go and it will rebound? So for that reason, we often don't try to time the market. Rather than try to time the market, if you hold your stock or your fund or whatever you have all the way from where it began through the market downturn and back through the recovery, you can be certain that you didn't let your asset go at the lowest point, because simply holding onto it for the long term has allowed the prices to recover to where they were previously, and hopefully beyond that even. Now, during a market downturn, you're going to hear a lot of quote-unquote experts in the media, different pundits who say different things. You'll hear some of these terms such as dip and correction and crash, and you'll hear different opinions, and sometimes it can come across as doom and gloom. So at that point, if you're getting concerned about your investments, it may be wise to meet with a financial advisor, because the advisor can put it into a historical perspective, talk about previous dips and previous corrections and what has happened afterwards. Because like I said, if you're a long-term investor, this is actually something we expect to encounter, and it's something that has certainly happened for decades and decades. However, if you're really truly uncomfortable with what you're seeing in the news, in the market, and the numbers you're seeing on your statements when you look at your investment accounts, a thing that you could do is you could always reassess your investment plan with your advisor, because your risk tolerance may not be what we thought it was. If you're more conservative, then perhaps you should have a more conservative approach that will give you some of that protection during market downturn. So if you're a long-term investor, you'll inevitably encounter a scenario where the market does have a downturn. In fact, right now in 2022, the market has had a bit of a correction. And so you should meet with a financial advisor, talk about your plan, make sure that it's still appropriate, make sure that your risk tolerance still relates to the way that you're investing. And in a lot of situations, you're just going to want to stay committed to your plan. Of course, talk to your advisor, but for many people, riding it out until the market recovers is ultimately the best decision. Thanks for watching the video today. I hope you learned something, and if you'd like to watch other videos or learn more about us, on YouTube, we are Invest with JGA, and then on the internet, it's just investwithjga.com.